Well, let's get across the market open. Mark Gardner joining us from MPC Markets. Mark, happy Monday to you.
Happy Monday.
Let's begin on Friday. Last Friday, though, in the States, because the focus is very much on that inflation data. What did you make of it? Because the markets liked it.
Yeah, markets really liked it. Many of the quotes were is given the green light for rate cuts. Look, it was 3%, which was 0.1 better than expected. 20% less data supposedly was taken in just due to the government shutdown, and it is the only piece of government data that's come out. We're now in the 27th day of the US government shutdown, so this time next week we will equal the longest shutdown. But yeah, I don't know whether 3% is something to celebrate about, to be honest. The target, which they've abandoned, and just because they've abandoned it doesn't necessarily mean it's a good thing, but was 2%. So I don't think 3% is all that great. And there's, the CPI numbers are very, they tend to take things out when they don't suit the argument. So, and that cost of living crisis really, when you go through things like that, you very much use. They're talking beef prices, they're talking insurance, they're talking, particularly car insurance, used cars and things are all up, anywhere up to 20% the last year, or sometimes more. So, I think, we'll get core PCE. We've had a few Fed members come out and say, yeah, rate cuts are coming over the weekend, but what you've got to remember about that is that they're all auditioning for Jerome Powell's job. So, and saying they're going to be measured on interest rates ain't going to get them the job. So I would imagine that Fed jawboning from a few of the few that are lobbying for that job, which will definitely be handed over to someone else come May. So yes, while there'll be optimism around this, and there's reason to be optimistic given the headlines, I think if you scratch under the surface, 3% inflation and a bunch of promised rate cuts from people who are lobbying for a job, but they're not as concrete as you would hope for.
Now, of course, we've got a raft of central bank decisions this week. The Fed, the ECB, the Bank of Japan, the Bank of Canada. Next week we've got the RBA, but ahead of that we've got our own CPI data for the quarter two, which is going to be critical as far as their decisions concerned.
Yeah, it is very critical because the monthly gives a headline to it, but it's really the quarterly CPI data that's much more comprehensive, and the RBA takes a fair bit more notice of. So that'll be critical for here, particularly. And look, who knows what we haven't been particularly affected by tariffs and things, but we have. It just depends on what you can cherry pick a lot of things that have been inflationary, and but the numbers seem to always come in slightly better than slightly less than what we think. I think there's a bit of a disconnect between the numbers and the actual cost of living. So that'll really tell the tale for rate movements here in Australia for probably until the end of the year, I would imagine, and then I think the trade uncertainty just globally makes it a very difficult job for the central banks at the moment. So I would expect some relatively measured statements out of most of the other central banks.
Well, you mentioned trade uncertainty. We did hear from US Treasury Secretary Scott Bessner said, look, they've had constructive talks between the Chinese and the US on the sidelines at the ASEAN summit. They've come up with some sort of framework for a trade deal.
Yeah, so just to give some context, I think it takes about 3 years generally to get a trade deal done. So I know Trump works a lot faster, he's from the private sector, but that doesn't necessarily mean the Chinese will be. So, and one thing you've got to be very, very conscious of is the Chinese, he's announced a trade deal is just done and dusted at least 3 times, I believe. So, if not 4, but the Chinese have confirmed they have agreed to a framework. So, and essentially they'll start importing the soybeans again, US soybeans. They'll de-restrict those rare earth controls potentially. So, but I wouldn't say that it's going to be a full trade deal done. But I think progress is a good thing, and it looks to be that the 100% tariffs won't come in. On November the 1st, if they agree to this part, and then those. But I dare say, those rare earth stocks have been running hot. But if China and the US do a deal on rare earths, it's not going to be good for Australian rare earths companies, I would imagine, because they've been trading at that significant premium because we're largely the only other option, really, in terms of refined rare earths.
Meanwhile, equities look more records on Friday. Wall Street finishing at a record, obviously buoyed by that inflation data, but also some corporate results too. And we've got a very big week ahead in terms of corporate earnings.
Yeah, massive week ahead. We've got five of the Mag 7, I believe, and we've also got United Health on the Tuesday, which was the biggest, well, the world's largest healthcare company until it's had a bunch of woes this this year. But we've got Apple, Apple and Amazon on the Thursday, which we'll get Friday morning, and we've got Microsoft. We've definitely got Microsoft. We're potentially Google or something there. Oh, Meta, sorry, on Wednesday night. So Google is really the only one missing there, and we obviously had Tesla and Netflix last week. So. And you've got a bunch of really headline acts like Caterpillar, Eli Lilly, Merck. I dare say that healthcare sector. I don't think the tariffs have really even come into effect yet. He's threatened a lot of things, so I think the negative sentiment in that sector may be buoyed by slightly better than expected, results from those companies. Caterpillar's always a bit of a bellwether for the, for the industrial economy. And as I said, United Health as well, which is a large part of a lot of those healthcare ETFs, that'll be a really important result after Warren Buffett put it in an investment this quarter. You would probably expect there to be an improvement, and to be honest, wouldn't be hard to get an improvement because they've had an absolute disaster. They stopped giving guidance and then they reinstated guidance and then missed their own guidance. So I dare say that they'll be very, very cautious to make sure they hit their guidance this time around. But you've got to be mindful as well that Warren Buffett works on a 10 or 15 year time frame. It may not be this earnings that's positive. It may be sometime in the next 12 months. So, but a very, very busy week in terms for the US, and we'll start to see one thing that everyone will want to see is monetization out of AI, and particularly from the Microsofts and the Amazons of the world, because they're going to get a little bit impatient on those. Investors will get a little bit patient because we're priced to perfection here at the moment, and any misstep we'll probably see. We're up 40% now from the lows, and investor sentiment is just hyper bullish.
Yep.
Because we're expecting rate cuts on a US trade deal. If these earnings disappoint, a lot of air could be sucked out of the market potentially. So probably just warranted to be cautious, but certainly won't see any of that negativity until later in the week, if there is any negativity at all.
And what are you expecting locally, Mark?
Locally, I think we should follow the market higher. I think the gold miners got unnecessarily smacked, so we should probably see a bit of a pull, a recovery in those guys. But this was a broad rally on Friday night, so and there's a few moves in terms of copper and things which may help the mining sector as well. So BHP and Rio have been doing quite well, and that tends to help the market higher. And US trade deal with China obviously means that, and we've done a trade deal with the US, etc. So that should be fairly positive for a very large chunk of our market, and the banks will probably just follow it higher.